females are the primary financial decision makers in their household, and females trust other females more than they trust men when it comes to financial advice. And all the stats show that there should be more women in this business. So I'm very passionate about trying to inspire other women to get in this business and to not give up.
Welcome to A Woman's Clarity, a podcast that empowers financial professionals to better connect with and serve their female clients. Listen in as host Kirsten Schlumbohm, Vice President of Annuity Sales at C2P, and her guests help you speak the language of women clients and meet their unique financial needs and goals.
Welcome to Women's Clarity. I'm Kirsten Schlumbohm, host of this podcast, and I am blessed and excited to have our next guest. We have the Annuity Rockstar, the guru, the woman, the myth, the legend, Sheryl Moore. Sheryl, welcome to the podcast.
Thanks for having me, Kirsten.
Yeah, you're welcome. And thank you for taking time. I know how busy you are because it feels like every minute of your day is accounted for. So thank you for sharing your time with us.
You know what? I'm always happy to do anything that can help spread the gospel about life insurance and annuities. So thanks for the opportunity.
Absolutely. But now we're going to go on the Wayback Machine. I don't have a time machine. It's the Wayback Machine. I started at ING, which is now Voya, 20 years ago. And one day, this gentleman in a kilt and a young woman behind him came in to share with us about the competitive intel for annuities. And that was the day I met you. And it was amazing because though he was doing a lot of the talking, I knew you were doing a lot of work. So Sheryl, do you mind sharing your origin story and how you got involved in this business and some of the steps that you got to where you are today?
Yeah, I was hired for a telephone customer service position in a home office. And that home office is today what we would call Athene. But at the time, I was employed by a mutual holding company where I supported about 5 different life insurance companies beneath our umbrella. And I loved the telephone customer service role. It was like baptism by fire. And I asked a lot of questions, moved up through the company pretty quickly. But you have to keep in mind that at this time, it was a very small, very entrepreneurial company. I eventually was appointed to a role where I was in charge of competitive intelligence and product development for life insurance and annuity products for all of those insurance companies under the mutual holding company umbrella. And that's really where I started my jam. Like, I knew this is what I was created for. Like, I loved being able to spy on other insurance companies using public information and using it to help my company have more attractive product offerings and marketing programs. So that's where I started. Now, I left there because my oldest child was born with birth defects and health problems, and it required him to have surgeries every year. And the company that I worked for, Ameris, changed their health plan so that it no longer covered his surgeries.
Oh, goodness.
And so I had to leave there and go work at Principal Financial Group, which has wonderful health insurance. But I truthfully made it about 8 months before I wanted to spoon my eyes out. And that's really because I was naive when it came to distribution channels. Ameris sold products through independent agents, and there was a small career agency force that I didn't really support. Principal distributes their products through a career agency model or captive insurance agency. And if I had $1 for every time they said to me, they'll sell what we give them because they have to, I would be rich. Competitive intelligence and captive distribution are oxymorons. I was looking for another job when my position was eliminated because Principal demutualized. And they felt that having competitive intelligence put their stockholders at risk. So 8 months after I got hired, I got my walking papers. And Kirsten, I know you understand this because I know you well enough, but I took it really personally.
Mm-hmm. Hard not to. It's easy to.
Yeah. I just remember crying when I was being escorted by the security officer to the parking ramp.
That's hard in itself. You're being escorted out by security. It makes you feel like you've done something wrong, but your position was eliminated. You did nothing wrong.
Competitive intelligence is that way, though, because the insurance companies always want to make sure that they're protecting themselves in the event that you decide to use information against them if you go somewhere else. I basically needed to pull up my big girl pants and get over the fact that I had just gotten my pink slip. And I really wanted to keep doing what I was doing, but my job is so highly specialized because normally product developers are actuaries, and I'm not an actuary. Tell the truth, I'm not even really good at math.
That's okay. Math is hard.
Yes. I started looking at other insurance companies in Des Moines, Iowa that may have competitive intelligence. And truthfully speaking, we have over 100 insurance companies in Iowa. And the only two that had a life and annuity competitive intel role were the company I'd left 8 months previous and the company that was giving me my pink slip. So I was out of options. And really, the closest thing to doing what I did is wholesaling, which you get. But I was in a tough position because I was a single mom of 3 kids with no child support. My ex-husband had been a police officer who went to federal prison. And so I was very suddenly very poor, did not have a lot of support. My grandparents lived in Des Moines, but they were elderly and needed help themselves. So I was helping to care for them too. So I couldn't really travel. Wholesaling was out of the question. And if I wasn't going to do wholesaling, I was going to take a huge step back in pay, which I couldn't afford because I was paying $455 a week for daycare. And that was really what motivated me to start my own business. And that story is really interesting too. I just thought so many insurance companies called me in my competitive intelligence role. Other competitive intel people would contact me and say, Sheryl, I need help understanding this indexing method, or can you help me to understand XYZ insurance company's new product? And I had gotten a reputation to be the queen of indexing because Ameris Group was the #1 seller of index life and indexed annuities at the time that I worked there. And I got a lot of questions and I thought, you know what? I'm just going to become a consultant because people will pay me to be able to ask these questions and get answers. And I was a little naive because I decided to make a pitch at the insurance company that was the #1 seller of indexed annuities at that time. And I pitched something called a guaranteed lifetime withdrawal benefit. Have you heard of it?
Oh my goodness. What is that? I've never heard of that in my lifetime.
Yeah, I thought it would be useful. I'd done some market research to find out why people didn't annuitize and develop this concept of using guaranteed lifetime withdrawal benefits on fixed and indexed annuities so that agents could talk to their clients about guaranteed lifetime income. And I pitched the story to this top seller of indexed annuities. And in the middle of the pitch, the chief marketing officer cuts me off and says, darling, I have pimples on my ASS that are older than you. Why do I need to listen to anything you have to say? And I have to be honest, I was jarred for a second, but then I gave a response and basically said, you know what? If you're not going to take advantage of this, I'm going to take it to somebody who will. And you need to be worried about your competition because you're dealing with some issues that the optics are bad and this GLWB will take care of this for you. And I just continued with my pitch that when I walked out of that insurance company, I felt discriminated against. And I really felt like he was being condescending because I was a woman and because I was young. And so I did some real soul searching and I was like, hey, me and all the 65-year-old white guys in this business are not going to get along too great because I don't have credibility. When I started in the insurance industry, I was like 22 years old. And I learned a lot in a short amount of time about indexing, but I understood why people would question me.
But at 22 years old, you probably look like you're 16 because I sold life insurance door to door at 22 years old and I look like I was 15. I get that. But I want to back up to one thing, if you don't mind me interrupting.
Sure.
He said he had pimples older than you on his ASS, I would have
Yes.
asked him if he needed some Noxzema. But I think your response was more appropriate, but what's condescending? It was demeaning. And you actually knew what you were talking about. So carry on, please.
Good suggestion. I wish I would have thought of that in the moment. But I decided that I needed to put the consulting business on the back burner until I established some more credibility. I decided to go back to school and earn my law degree, which I didn't finish because my son passed away 10 years ago. But that was my plan. I'm going to become an attorney and then I'll get credibility because I have a JD after my name. But what I started doing in the interim was writing a bunch of articles. I wrote a book. I started doing a lot of keynote speaking engagements so that people could see I know what I'm talking about. And in the interim, I developed a business called Wink Inc. And Wink is a market research firm. We have this massive database that has all the life insurance and annuity products in it. And it shows what all the features of the products are, what the credited rates and caps and parts and spreads are. It's just basically a place to search out information on products. And then I partnered with the guy with the kilt, as you alluded to, and he was conducting a sales survey of indexed annuities. And I bought that survey from him and expanded it so that today we are reporting sales on all life insurance and annuity products at Wink. I would say for those of you who are not familiar with us, we're like LIMRA, but at a more granular level. LIMRA would say, for example, Jackson National is the number one seller of variable annuities. We would say, yes, that's true, but Jackson has 8 different VAs. Their Perspective 2 is their number one seller. And they sold this much of it through banks, this much through RAs, wirehouses, BDs, et cetera, et cetera. At one point, the company that was known as Ameris later became Aviva, and they had a big number one on the front of all their marketing materials. And the citation at the bottom of the page was my company. So that was almost like the ultimate comeback for me to have my company showcase my data.
I love it. Your competitive intel is phenomenal. But I'm going to go back to the Wayback Machine, though. Back when you were doing this originally, we were blown away if we had a producer who did $1 million in production. When I was at ING, we had a board. We had cake the day we had an advisor hit $1 million. So the annuities that you started working on are no longer the same type of annuities you're reporting on.
Yeah.
This evolution of annuities has come a long way. And
The products have been transformed. I absolutely agree with you.
Yeah, and it's amazing. So you purchased this reporting system. You've become really the annuity rock star. People come to you for all things annuity product, competitive intel related, as well as life insurance. When you started out in this journey of life and you're looking for a career, did you ever think that you would be in this?
I'll be honest with you. I started on my 14th birthday at a grocery store chain in Des Moines, Iowa, bagging groceries. And I worked my way up through that company until I was a manager of a store. But then when I had kids, I decided to become a stay-at-home mom. And really that was motivated by my son's birth defects and health problems. I couldn't put him in daycare. The grocery store I thought was being put on the back burner and I assumed I would go back. But when I had to face the realization that I needed to support 3 kids with no help, I knew that managing a grocery store would not pay sufficiently for me to support my kids on my own. But I would have never conceived that I'd be working in the life insurance industry. My grandfather was an insurance agent for New York Life.
Okay.
I was with him on the day that he paid his first claim. And so my grandparents had court-ordered visitation of us. It was my dad's parents. And I was probably 8 or 9, Kirsten. And grandfather came home and was like so exhausted. And he was explaining to my grandmother about how he had just left this funeral and this widow was holding his hands the whole time through the service. And she just kept crying and thanking him over and over again. And when the funeral was over, she said, I want you to know how important you are to my family because when you came in and proposed this life insurance for my husband, I told him that we can't afford it. And I told him not to buy the life insurance because I thought it was too expensive. But I'm so glad he didn't listen to me because now my children and I don't have to leave our home. And I didn't really understood what that meant, but I knew my grandfather was an important person. And I have to say that when it came to looking for a job, when I had been out of the workforce for so long, I just thought back to my grandfather when I was applying for the job in the home office. And I thought, you know what, this is a very noble career and I would be honored to work in it. That kind of provided some inspiration. But to be honest, I never conceived I'd be doing this.
Maybe your grandfather had a hand in this from the universe. That's an amazing story, though. But that's how life insurance claims were paid, were face to face back then. It was such a personal business. And I'm really glad that you did decide to get in the business, starting in one role and obviously building yourself into a very good career. So this is one thing I'd love to talk about with women in this industry. Is you don't always have to be the front stage. You can be in the backstage. You can be in the middle stage. People think financial services and they say, oh, I don't want to be a financial advisor. But there's so many opportunities to serve ladies and gentlemen in financial services. So what kind of advice would you give somebody who's feeling timid, that they would love to be in the financial services industry, but they're scared because they don't think they could be an advisor? Is there any words of wisdom you might impart with them?
I think what you said is really important. You don't have to be a financial advisor to serve people in the life insurance industry. I do think that so many people focus on that, but there are opportunities to work in distribution like you, to work in a home office like I did, to work in supporting roles. And I think that my advice would be very tailored to women and say, don't let the fact that you have a family or you're supporting other people hold you back, because this industry can accommodate people of all types with all sorts of families and support systems. And it's very satisfying to work in this industry. I think that women don't get enough credit for being financial decision makers and for taking control of their finances. And that really puts them in a key position to succeed in this business.
I talk with women all the time, whether at work or outside of work, and they'll say things like, I'm just a housewife, or I'm just a stay-at-home mom, I'm this. And I'm like, you are the CFO of your family. You are making the financial decisions. So I think we as women have downplayed our role in society and what we can do. And we're not embracing the fact that we have an opportunity here that's just awesome to be in financial services. There's a lot of flexibility with your scheduling, like even with your team at Wink. A few years ago, when Jamie, your vice president of the life distribution or the life sales part of Wink, she had a baby, but she got to bring her baby into work and work there. And then you guys work remotely. You're so flexible. So there's so much opportunity to be a part of this huge industry in different ways. I do applaud that you empower a lot of women to be strong women in this industry.
Thank you. I'm really interested in getting more women in this business because all the statistics show females are the primary financial decision makers in their household, and females trust other females more than they trust men when it comes to financial advice. And all the stats show that there should be more women in this business. So I'm very passionate about trying to inspire other women to get in this business and to not give up. If I hadn't had the opportunity to go work at Ameris, I wouldn't be where I'm at today. So it just took one manager to take a chance on me. And if you can get past all of the robo resume judgers or whatever they use these days, it's a very satisfying career. It is.
And it is. And I do appreciate everything you've done. And I think about our journey together, meeting 20 years ago. And then we re-met in 2014 with Brian Gregg, who was at the time the CDO at F&G. Now he's an independent advisor. And then 2 years ago, when I was looking at developing a program for C2P and engaging more female advisors to get in front of more female clients, you introduced me to Cheryl Hickerson, who I'm a fangirl of. And I talked with her and I was just on her podcast. So you are very influential in this industry. So that's amazing. But I'm going to take us back now, again, to your pitch to that insurance company where the gentleman was like, thanks, but no thanks. You're too young. You don't have the background to tell us this. Where products were then versus where they are today, do you maybe mind shedding some light on the evolution of FIAs?
When I started my business, there were 120 different indexed annuities available for sale. Today, there's about 600. And I would say that those 120 different products were very dissimilar from each other. And we had, I want to say about 38 different insurance companies offering those products. Most companies had just a single indexed annuity, as well as some fixed annuities. But there wasn't tremendous sales of indexed annuities back then. They were just getting started. They would be considered a niche product.
And the credit methods were very simple. It was S&P, NASDAQ, the Russell, and maybe the Hang Seng with a few carriers.
And mostly annual point-to-point monthly averaging too.
Correct.
I've seen, especially over the last year, a lot of insurance companies innovating through adding new indexing methods onto their indexed annuities. So back in the early days when we had 3 different indexing methods, today we have closer to 20. And that's expanding by the week, I would say. And then we had 12 different indexes upon which you could earn indexed interest. And today we have 189. And you know what? It's almost to the point where I like to say we have a simple product that's being marketed in a complex way, because the idea behind the index annuity is zero's your hero. You never get less than zero, and you earn index linked interest subject to a limit. That sounds simple enough, but getting to the point where you understand how much you're going to earn on the index annuity has gotten more complicated through the years. We've also added all sorts of riders, guaranteed lifetime withdrawal benefits, guaranteed minimum death benefits. We've even had minimum accumulation or minimum income benefit, and we have numerous GMABs in the industry as well. But I've been inspired to see insurance companies even innovating through surrender charge waivers, which back in the old days, it was like you had nursing home and terminal illness, and that was it, or maybe disability. And today there are insurance companies that have like emergency access surrender charge waivers, where if you experience a car accident or a fire in your home or some catastrophic event, you're automatically eligible to earn your account value without surrender charges.
That's really cool, because back when Katrina hit, a lot of insurance companies did allow extra access to their monies to the victims of Katrina so that they could get their lives put back together or get to that next day. So there's a lot of innovation.
Yeah, there absolutely has been. And I think that the other thing that I've seen is that annuities have become more consumer friendly. And that's really because we shot ourselves in the foot when it comes to indexed annuities, especially. When I started in this business, it was not unusual to see products that paid 14% commission.
How long was the surrender charge on that, though? 16 years?
22 years.
Oh, that was right. 22 years. Goodness.
Yeah. And then we had premium bonuses as high as 14%. And those bonuses were often credited on every payment that was made into the annuity. Today, you're doing good if you can find a 10% premium bonus. And the average commission that's paid on index annuities is about 6.5%. And the highest commission that we have is 9%. I would also say that we issue to much younger people. It used to be a lot of people would have unlimited issue ages, but then what we started to see was that the bulk of annuity suitability issues were occurring with people over age 85. And so when the National Association of Insurance Commissioners first proposed the Suitability and Annuity Transactions Model Act, it originally applied only to people age 65 or older. And it didn't take long before regulators decided that wasn't good enough, and we were seeing abuses in younger age people. So they eliminated the age component and just passed another iteration of the Suitability and Annuity Transactions Model Act. Now we've had 4 iterations of it. I'll say that Annuities are much more consumer friendly than they were prior to the suitability regulation. And I see far less lawsuits in this business, far less attorneys general going after insurance companies. And I'm
Right.
grateful for it because annuities have a bad enough name. They're known as the four-letter word of the life insurance industry because so many people think they know what they are, but they get it wrong. We don't need the extra help.
I like to tell people they're not your grandma's annuities. They're not the same thing today, what were being sold to our grandparents back then. They are better for the clients. But that comes back to the education of advisors, financial
Mhm.
professionals, to make sure they understand how fixed index annuities actually work. And again, I always like to go back to what you said before. They were designed to give you a higher rate of return in the fixed rate market, 2 to 3%. And
Mhm.
let's manage expectations and let's make sure we're using them properly and educate not only the advisors, but the clients because they have changed tremendously. So that being said, what's your favorite misconception about annuities that's out there right now?
My favorite has to be that annuities lock up your money. I will admit that annuities have surrender charges. Most all of them do. There are some that don't. But people think locking up your money means you can't access your cash. And really, annuities are pretty liquid in a lot of different ways if you think about it. Penalty-free withdrawals, surrender charge waivers, income riders, annuitization. On death, index annuities pay the full account value. Most people don't think about things like that, but that's my favorite objection just because I really like shutting down when people think negative things about these products. And I can't blame them
Right.
because the media really maligns annuities, but I love overcoming those objections.
I can tell you wouldn't be in this industry doing what you do and putting all the posts out and the articles that you put out if you didn't. And that one is really a zinger because people say, I hate annuities. And you should too, because it ties your money up and you can't get to it. That's false. They have high fees. That's not necessarily true, depending on what type of annuity you're putting into your retirement plan. Some do have fees, some don't. So, what are we looking to accomplish? And it's the
Yeah.
education.
I like to say that the majority of annuities do not have fees, but usually when you read that in the media, they just say annuities have high fees.
Mhm.
And they don't specifically say variable annuities have high fees, which is normally the product that we associate with fees. But that's probably a close second runner up for me.
Yeah, it always chaps me when I hear it on the news or I hear it on one of the money talk shows. I'm like, that's not true. They're generalizing, but you don't drive interest or get the buzz without generalizing something and then causing that buzz to have people not want, or maybe will look at it or not look at it because of it. So it's
Yeah.
overcoming the myths. It's overcoming the discrimination of annuities, if that's even the right way to say it.
Yeah, I like to say that.
You like to say discrimination because it's
Yeah.
risk management. When you're putting an annuity or life insurance into a financial plan, it's risk management.
Yeah, that's a huge misconception itself, Kristen, because a lot of financial advisors think that they can do better than annuities when it comes to returns. So they'll say, why don't you couple some stocks with a bond fund and create your own annuity? And I'm like, whoa, hey, annuities offer a guaranteed paycheck for life. What you're proposing doesn't. And
Right.
what you need to realize is that annuities are not all about alpha. They also provide that guaranteed paycheck. That insurance element is something you can't replicate.
We always ask in our planning process, what portion of your money do you want, like in safe money? And then how would you like to do that? You can either do it through bonds, through CDs, or through an insurance carrier. And we talk about the benefits of each, but really the insurance carrier is the only way, like you said, to guarantee that paycheck, and they take on the risk, the client doesn't. So it's powerful. And
Mhm.
again, that goes back to educating all advisors or financial professionals on how to use fixed index annuities.
Mhm.
That being said, I feel personally that fixed index annuities are perfect for a woman's financial plan. Because one, this is not a secret. Women have been paid less. There's the income gap. So this is a way to give them their own personal pension for their retirement. So they have control, flexibility, and a retirement that they can count on.
The research that I've conducted shows that the majority of Americans are ripe for having a product like index annuities in their portfolio. I just think it's a matter of us getting that message to people, because there are so many different types of financial services professionals. There's the agent who will sell you your homeowners and auto insurance, and the person at your bank that sells you CDs and checking accounts. And not everybody has access to an insurance agent or has a relationship with an insurance agent and knows that if I'm interested in this product, that's who I need to speak with. And I think the more we can do to educate people about that, the more mainstream annuities will become, and indexed annuities in particular.
I love the thought, education. We really do lead with education here at C2P. We talk about it. We believe in it because we believe that by educating our advisors, they're educating their clients, and their financial plan is going to be more successful for them. But there's a lot of things coming at this industry right now. And I don't know if you want to maybe speak to some of the DOL is coming after and making some changes. What are your thoughts and insights on some of the challenges that are really facing our industry right now?
I look at the Department of Labor's fiduciary rule as a huge sticking point. I wouldn't say a bump in the road because it's more significant than that, but I'm concerned because 66% of indexed annuity sales are qualified. And that would be monies that are impacted by this fiduciary rule. I don't think that the reasonable compensation thing is a big deal, just because the DOL did not define what reasonable compensation is. And they did come right out and say, we're not outlawing commissions. We're not saying you have to collect fees rather than commissions. So I think the insurance companies are going to have to make some decisions on what they feel is reasonable. And I think the biggest change that we're going to see in regards to compensation is disclosure of comp. And for some insurance companies, they've already had their advisors doing this for a while. But I think that's the biggest thing. And I don't think it's something that our advisors should have stress about, just because people buy houses, people buy cars. They know that those people who sell them those things are being compensated through a commission, and it doesn't stop them from making the purchase. And I think, too, if the advisor can educate the client to the matter of it's the insurance company paying me, not you, that's just an added layer that can help with that. So I'm not worried about the commission part. I'm worried about all the paperwork, all of the comparison that you're going to have to do to document in the client's file. I just think it's going to be a disruption for insurance agents, and it's going to take them time to work in this new reality. So there will be some hiccups. It'll take some time to get on board with what does it mean to comply with ERISA. But I have confidence in our industry, Kirsten, because we're very resilient. We have gone through so much BS, pardon my French. We've had a lot of regulatory and legislative challenges in the 25 years that I've been doing this. And I have confidence that we will handle this just as we have those other challenges.
I think it's going to be a hiccup. I think there could be some changes that some people, if they're not paying attention, it's going to affect them. But like from my perspective and what we do here at C2P, we've got our best interest screening process for products. I typically send my advisors 3 product recommendations. They pick out the best one that fits their financial plan. We encourage them to look at the competitive nature and the landscape right now, because one week, one product could be number 1 for income, and next week it is someone else. It's very competitive, but I think it's really important to take a moment and look at what you can offer your client and pick the best one based on what they're looking to accomplish in their plan. So I do think there's ways for us to navigate this, but it's going to be a hiccup. When anything changes, everybody gets a little bit nervous. There could be some changes that people don't like. Potentially, trips might not be on the table anymore, different types of incentives for sales, potentially. But I think we'll navigate it, because I think a well-written financial plan needs to have risk mitigation in it, whether it's life insurance, a fixed annuity, a fixed index annuity, a MIGA. There needs to be that risk management. And I don't think FIAs are going away in the near future. I actually feel like there's probably going to be more enhancements. If I lived in a perfect world, I would like to have more transparency when it comes to some of these proprietary entities, personally, because it can be confusing. And sometimes you think you're diversifying in one product, but you're actually using the same underlying measures. They want that peace of mind. It's the protection conversation. It's the peace of mind product. And I actually just helped an advisor win business from another advisor because of an illustration like that and using too much of the client's total liquid assets. So I helped him poke holes in the story, but provided a story so that the client knew that there are good products out there and there are ways to put annuities into their portfolio and be safe and not feel like, wow, this is what's going to happen. Because you put that illustration in front of a client, that's what they expect to have happen. But it's always interesting. We have such a fascinating industry. There's always something going on. Now, we are wrapping up and coming towards the end of our time together. I've got two more things I'd love to just hit on with you. Now, June is Annuity Awareness Month. Where did that come about?
I was involved in an organization known as the National Association for Fixed Annuities, and we needed a state to sponsor June being Annuity Awareness Month. So I actually took it to the governor of Iowa, and it was passed into law that June is Annuity Awareness Month. I'm very proud of that. We need a month for annuity awareness. We already had one for life insurance. It just makes sense to have it for annuities. So I couldn't be more pleased to be associated with that.
Was that Governor Terry Branstad or Bill Sack?
It was Terry Branstad.
Oh, I remember him as the governor of Iowa. But that's wonderful. I love your advocacy for not only the industry, but for like your networking with the government, state of Iowa to get this started, because I think it's really important that we have June as an Annuity Awareness Month, because I think, again, we go back to the educational portion. The more we educate, the better we can do, and the better we can do, the happier our clients are. So I love it. Now, in wrapping, I just want to ask you one last question. If there's any words of advice that you would give, if you could go back and tell yourself 20, 25 years ago, getting into this industry, is there any advice you'd whisper to yourself that wouldn't possibly change your trajectory, or something that you'd tell yourself? Something today you didn't know then?
If I had to go back and talk to myself, I would say, don't let guys with pimples on their behinds that are older than you discourage you from succeeding in this business. Because truthfully, Kirsten, I've undersold myself for so many years after getting that comment because I felt like I was not worthy and I deserve more. And I didn't recognize that. I've worked really hard to be where I'm at, and I think that I'm deserving of that. And I just wish I could have gone back and said, you know what? Haters hate. Let your haters be your motivators.
I love that, because look at where you are today. You are the annuity rock star. You are the go-to person for all information on annuities. So thank you for not giving up. You mean a lot to this industry, and I appreciate that. Now, if anybody listening isn't aware of you and your company, do you mind sharing your web address so people can go check you out?
Yeah, you bet. It's www.winkintel.com. And I would encourage anybody who's not familiar with me to follow me on LinkedIn, just because we have a ton of really engaging conversations out there. And a lot of people have an opportunity to learn, myself included. So please go ahead and connect with me.
I love it. Do connect with Sheryl on LinkedIn. She is a wealth of knowledge. So thank you so much, dear friend, for being on here with me. I always appreciate your insight and your energy.
Thank you very much, Kirsten. It's been a pleasure. Thanks for having me.
You're welcome. And everybody listening, whatever you do today, go out to Sheryl Moore, connect with her, and then whatever you do after that, make it a great day. Thank you for listening.
Thanks for tuning in to A Woman's Clarity, brought to you by C2P, an organization whose purpose is to educate, train, grow, and support holistic financial advisors so families can achieve true prosperity. Subscribe now and never miss an opportunity to learn how to become a more proactive, holistic advisor to the fast-growing female client base. Visit C2PEnterprises.com to learn how we can help support and enhance your business. At the time of delivery and any subsequent publishing, information was deemed reliable but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.